Yo traders, good morning and what's up? Hope everybody is having a good Friday. Today we're going to be taking a look at something simple but important, and that is what are the different order types, different common order types. Something I think a lot of people are very familiar with, but we have some new people here and there might be a little confusion because these the vocabulary here. It's a not really vocabulary we use anywhere else outside of trading. So we're going to go over them. That's going to be our little learning lesson for today. I'm going to use Coinbase as an example. Show you guys what these are. So there are three simple types of orders, and there are more, and we'll get into those in a different lesson. But for today, we're going to focus on the three basic types. And those are market orders, limit orders, and stop orders. And what the difference is between the three, and potentially what different uses they may have. So first, we're going to look at market order, the simplest order type. Takes the least amount of information and the least really effort to do. So essentially, in each of these three, there is a buy and sell option, which you can toggle right here. The pair that we have selected here is Bitcoin USD. So say we wanted to purchase Bitcoin. We had USD in our account. We were looking to get Bitcoin. We could go to market order buy, and then down here in this amount box, we would fill in the amount, the US dollar amount that we are looking to buy. So price is currently 10,900. If we were to buy 10,900 USD worth of Bitcoin, we can see down here underneath the fee that would be involved in that, $54.50. And it will show us underneath that the total is how much Bitcoin we would get if we did execute this order. I don't have $11,000 in this account, so I can't actually place this order, nor would I typically want to. So market orders are instant orders. They cannot be canceled. And what they do, if you remember from our order book episode a few weeks ago, if I'm to order buy here, it will buy at the most available or closest price in the order book above. So right now, if we zoom out, we would see, we would probably fill it at 10,888. Another important thing to know about market orders is, going crazy, is that they can fill at multiple prices. They just saw there actually prices fluctuating around here. And so just because I put 10,900 here and hit buy doesn't mean that all $10,900 worth of my buy is going to fill at the same price. This is basically known as slippage. And so what could happen here is you see that these are flashing. I might fill $100 at 10,844, and right now it'd be a lottery what you're going to get within about $1. But if there isn't enough liquidity, I may end up purchasing some of this order at a higher price. So what it does is it takes 10,900 and it pushes up through the order book until the entire order is filled. So that's the two most important things about market orders is one, they can't be canceled because they are instant. And two, is that they can fill it. They don't necessarily fill all at the same price. And that'll be reflected in, once you execute the order, it will show you at what price you filled each part of this with. So really, if there is enough available at the closest price to market price right now, you would fill it all. And if there is not $10,900 worth of Bitcoin available at the closest price to market order, it will keep taking the orders higher and higher up until it's completely satisfied. So the sell side is the exact same way, except you'll notice that now instead of amount when it was compared to buy, when we were talking about how much USD we wanted to buy worth, When we go to the sell side, now we're looking to sell Bitcoin. So in the same sense, if I wanted to sell 1 Bitcoin, we'll see that again, the fee is roughly $55, and we'll get $10,823 back in exchange for that 1 Bitcoin. So the same rules apply here. If I can't sell 1 Bitcoin at exactly the closest price, because as you see, these order books are always fluctuating. Wish I could take a snapshot, didn't plan for that. But sometimes you'll see there's only maybe 0.1 or 0.01 available at the closest to market price. It will do the same thing, except it will be looking for people looking to buy that order on the way down, and it will continue filling at whatever price it can. So in theory, zooming back out on the order book here, if all these bids were to be pulled, 10,860, 10,850, 10,840, right before we sold, it would actually do the same thing, and it would look down and it would fill out whatever the closest order is. So when you're buying in USD. When you're selling in Bitcoin for market orders. Market orders are likely the most used type of order. I don't recommend them. I think unless you're scalping, you're looking for really quick trades, market orders are really not ideal because of what we just talked about, the slippage. You're not guaranteed to have your order filled at any given price. Even if you see orders that would be sufficient, sometimes they're pulled, sometimes they're moved, and you can end up not getting what you expected out of it. So the next type of order, called a limit, this is going to eliminate that problem. And this is the one I recommend people use the most, because not only do you avoid those issues, but this allows you really to create a plan and have that plan execute as you intended. So limit order, we'll start with buy again. A limit order is different than a market order because it is not an instant order. If I wanted to buy, so I go to amount 1 Bitcoin, now I get to type the price that I want to buy 1 Bitcoin at. And so when you're buying as a limit order, you can only set this below what the current price is. So 10,848. I could not set a limit buy order at 10,900 or 11,000. I can only set it below 10,847. So I could do buy 1 Bitcoin at 10,000, and what will happen? I can't see it. So 10,500, let's say. If I were to put this order in, we would see it pop up right here at 10,500 in the order book. And what will happen is that order will sit there. Nothing will happen until price moves through the order book all the way down to 10,500. And if it goes below that, then our order will technically have to fill. I have never heard of an example really on any exchange where a limit order was set in advance and then price went past it and it not fill. It's almost guaranteed. Because you're in the queue, price can't skip an order. So unless you cancel your order, you will be filled at that price. Their limit orders are much better in general because you're buying on the way down, and we'll get into the selling next, but then you're selling on the way up. And that's really what trading should be. You shouldn't be selling on the way down and buying on the way up. That's doing it backwards. So limit sell is the same thing as a limit buy, except now you can only place this order above market price. So 10,850, I can't do a limit sell now at 10,560 because that's below. But I would be able to do it, say, at 11,000. And what that means is we'll see again up here, our order, you'll, on Coinbase at least, it will have an indicator here that you have an order at that price. And when price goes above 11,000, then that order will fill and I will sell my 1 Bitcoin in this example at 11,000. There's no possibility of slippage. There is a possibility that the order isn't completely filled if price only touches 11,000 in this example. It's possible that maybe only half of this 1 Bitcoin order fills and the remaining 0.5 will remain there until price completely exceeds 11,000 and goes to $11,001. You'll also notice there's a little tab down here that says advanced. For most uses of this, and in fact, I really can't figure out a reason that you would use this, but I'll explain what this is. Time in force policy. So this actually is kind of important. So good till canceled means that order will just stay there. It will stay there until it's completely filled. Good till time. If you select this, then you get to have another drop down box where you can select, okay, I want to sell 1 Bitcoin at 11,000, but I only want to do that order, let's say for 1 day. So tomorrow or in 24 hours, if I have this order set and it hasn't filled, it will cancel. It will eliminate it. There's certainly some use to this. I have never really personally used this. In general, if I set a limit order at a price, I plan on waiting until it fills. But there could be some reason that that you would have a time frame on it where you only are interested in selling or buying. This works the same way with limit buy in a certain time frame. Immediate or cancel. So this is one I don't really understand why someone would use this. I'm sure there's some technical reason, but for probably every single person that ever watches this, you're not going to use this. And what this does is it kind of turns that limit order into a market order because it creates it as a taker. A taker is a market order. A limit order is a maker order. Yeah, I'm not really sure why this would be used, but essentially it's making a limit order that isn't functioning as a limit order. So I'm not going to go into it because I really don't see a purpose. Fill or kill. I think this is really similar to the immediate or cancel. But I believe the difference is fill or kill is only will... Okay, so you set this order 11,000 for 1 Bitcoin. When price goes to 11,000, and in that scenario where it only partially fills, I believe that fill or kill will prevent it from filling, and it will only sell the entire 1 Bitcoin, or it won't, or it will essentially cancel the order altogether. So these two, not that useful in my opinion, but I'm sure someone has some reason that they'd use them. Not really something that I would recommend messing with. And so one more thing down here, you'll see execution. So post only. 99.9% of the time, when you're doing a limit order buy or sell, you want it to be post only. And the reason for this is post only makes it a limit order. If you do allow taker, it's very similar to maybe this immediate cancel or fill or kill. Not really that useful because a limit order is a maker order, not a taker order. Taker order again is a market order. To allow taker, really, I don't see the point of it. But a lot of people have asked me what this is, and it confuses them and makes them hesitant to set an order because they're not sure what they're selecting. So 99.9% of the time, you want it to be post only. Allowing taker might be useful if you're doing really fast, quick trades. I think maybe bot trading might use this. So essentially, you make a limit order, and so say that the price is exactly 10,877. If I put a limit order right here at this, pretty much at market price for a sell, and I allow taker, it may fill as a market order. This used to make a little more sense before, because Coinbase Pro used to be known as GDAX, and when it was known as GDAX, there was actually no fee for making any maker orders. So if you did a limit buy or sell, you would have no fee to your order, I guess because they're rewarding market makers. And I'm really at a loss as to why you would allow Taker. You're really just kind of allowing it to function as a market order, and why not just do it as a market order then? I don't know. So to clarify, good till canceled and post only are going to be 99% of your uses here for your limit orders. The third type of order is a stop order. And a stop order is a little tricky. This is more, I would rather personally recommend someone use a stop order than market orders. Because, alright, so a stop order has 3 different pieces of information that you need. First, you need to set a price. So if you were trying to put a stop loss here, say on Bitcoin, let's zoom into the 1 day or something. Say that you were short and you wanted to have a stop loss in case price moved up and made a new local high. So we see, oh, you can't see this part. Zoomed out. That's the best way to do it. Okay. Do it this way. So say if price goes above 11,000, you think it's going to break out. I'm just making up numbers here for the sake of this example. You've sold your Bitcoin and you think if price goes back above 11,000, then it's probably going to go up more, and I don't want to be caught short. So I'm going to set my stop price at 11,000 for this, for however much Bitcoin. So in this example, we'll go with 1 again. And then we need to set a limit price. So the limit price, here is where it's going to attempt to set an order once the stop price is reached. So we're at 10,800. If it goes to 11,000, I think it's going to go up more. So I set a stop price of 11,000, and I can put even the limit price of 11,000. And so once price reaches 11,000, it's going to attempt to set an order or execute that sell at 11,000. Let's do it with buy because people are probably more familiar with that. Let's say that I think if price goes below 10,800, I think it's going to keep going down. So I'm going to set my stop price at 10,800 and my limit price at 10,800. And so once price reaches, actually once price reaches 10,800, it's going to attempt to execute your order at 10,800. That's the basis of a stop. A stop order is a market order. It is not technically a limit order. It can be filled as a taker. If you make a difference, so if we set our stop price is 10,800, but we think, all right, once price hits 10,800, I actually want to be looking to sell if it goes down to 10,600. So what will happen is at 10,800, it will attempt to make an order for 10,600 on the sell side. And this is the basis of what we call a stop loss. I'm not a huge fan of stop losses when we're not using leverage. When you're using leverage, you always need to have a stop loss, in my opinion. But without leverage, stop losses tend to really get hunted in crypto, so they're very risky in my opinion, because typically they get triggered and then you're caught going the wrong direction. Price is going down, your stop loss is hit, it sells whatever you're looking to sell, and then a lot of the time it rebounds back up. A stop loss is definitely something that you don't want to use unless you understand how it works and what its purpose is. But definitely has its use, more so than market order. I'm not a fan. So limit order I think is the most valuable order to learn how to use, because you're putting your order in the book. You don't have to worry about the exchange going down while you're trading or while you're sleeping or something. If you have a limit order set on the buy or sell side, it will fill regardless of if you're able to log in or not, or you won't have to try to log in really quick in market order or market buy or sell. This is like a guaranteed thing as long as it's set ahead of time. Stop loss is probably the second most useful if you have knowledge of really when these are valuable and the price areas that you think are significant. If you have all of that, a stop order can be very valuable for you. And the market order, in my opinion, is the least important and should be the least used in general, because typically you're looking to market order because you're panicking or FOMOing. A limit order really reduces that use. You can't really FOMO or panic sell or buy in a limit, because you can only sell above price and buy below price. So I think good traders usually use limit orders because they have a plan. They see a sell-off coming, and so they look to do a limit buy at a value they believe it will bounce. Or on the sell aspect, a good trader will see prices rising. We had 10,890 a while ago as a target. Keep forgetting you guys can't see the chart on this because I have it zoomed in on the orders. Either way, so they would set a limit sell at an area they look to take profit because they believe that price is actually going to sell off from there. And it's good because it reinforces the selling on the way up and buying on the way down mindset. All right, that's the quick and easy explanation of orders. You have market, limit, and stop. Market is an instant order. Limit is a planned ahead order at a planned value and amount. And a stop order is used to hedge against movements or values being broken that you don't want to see. So like say you could set it at a low, and you could have a stop loss at a low, and if price goes below that local low, then you sell and you're looking to rebuy lower. Or if you're short and price sets a new high and you think it's going to continue rallying, a stop can be useful there because it's trading the breakout essentially, or getting you back into the fold. So yeah, that's about it. There are other kinds of orders. We'll go into them at a different time. They're a little more complicated, and so I wanted to get just the simple ones out of the way. Limit orders are my favorite, and I think are used the most and should be used the most. Likely market orders are the second most used, but I think the least valuable. And stop orders are likely the least used, but the second most valuable type of order, simple order. So there you go. We're done with that. I hope that was helpful for some people out there. During our one-on-ones on Wednesday, more than one person asked me about the different type of orders, and since then more people have asked me about them. And so I think it's something that a little clarification can be very valuable to a lot of people out there. Awesome.